It's Mad G, making moves, flipping real estate. We building wealth, get your minds right and elevate. Yo, it's the Mortgage King, we do it truly, bro. Dropping gems like a thief up in the jewelry cell. Wealth building equity in real estate, the mission. Collaboration is greater than competition.
What's good, y'all? Matt Garland here, NMLS number 58700, but I'm better known as MG the Mortgage Guy. So look, welcome back, the Home Buyers Blueprint. I am the Home Buyers Blueprint, but let's get right into today's topic because I don't have much time to go through this right now because I got an 8 o'clock meeting. So mortgage interest rates are skyrocketing right now, ladies and gentlemen. And I've been trying to tell you guys this for a whole year, that if you do not get into the real estate game now, it's going to cost you more money. No one wanted to listen to me. A lot of you guys wanted to wait and sit on the sidelines. You're waiting for a market to crash. You look into your uncle, your aunties, the internet economists. Everybody's telling you don't buy real estate. Well, you should have listened to me. You should have brought real estate last year. But that's neither here or there right now, right? Let's talk about today's mortgage market. And I'm smiling on my face because you know what? It is what it is. The market is up and it's stuck. Today's interest rates right now for a 30-year fix, even with the amazing credit, 780 credit scores, is hovering right around 5.5%. But ladies and gentlemen, I am here to tell you that's going to be more like 6% or higher come tomorrow, right? Most people, and I can just speak from my own experience and what me and my team are doing right now, from people that we are speaking to live. When I tell you, we are pretty much quoting everybody right now above 6%. It is absolutely insane. Just to think about just 2 months ago, 3 months ago, 6 months ago, interest rates were around 2.75 to 3%. Now, this got to show you something, right? Number one, Cape Derby, she said, Matt, I closed at 2.875 last month. That's because you probably was locked in for some months. You know what I'm saying? So congratulations to you, right? I want to tell you guys, this is a prime indicator of something I've been telling you guys also. The market does not wait for no one. The market does what it wants to do. There's no way to control it. So you have to take advantage of the opportunities that's in front of you when they are there, because everything is all about timing. Now, I would tell you guys, regardless if the interest rates are high, I'm still going to tell you, you should be buying real estate. All right. You got to pay attention to the mortgage payment. Can you afford the mortgage payment? And does the numbers make sense for you? Because to me, owning real estate is still better than renting, depending on your circumstances, right? If you can still afford, please go out there and buy real estate. Do not wait. Do not hesitate. Now, I want to talk about fixed rates versus adjustable rates. And shout out to Julio Lopez with the super chat. I really appreciate you. Now, I want to talk about fixed versus adjustable rates because that's become a topic of conversation right now. A lot of people have been hitting me up and asking me about this. Now, I'm going to tell you guys, like I tell everybody, strictly for live men, not for freshmen. Adjustable rate mortgages are, just in case you don't know what it is a mortgage or a variable mortgage that is fixed for a certain period of time. And then after that, that fixed period, it will adjust. Now, you can have a 3-year, 5-year, 7-year, or 10-year fixed period. And then after that fixed period, it will adjust to the market. If you do not have an exit strategy, meaning you're going to sell this house, you only want to live in it for a certain period of time, et cetera, then my recommendation is please do not put yourself in an adjustable rate mortgage. And especially if you do not have the risk tolerance, because as you guys see what's happening in the market this year with interest rates in the mortgage market, no one planned for interest rates to skyrocket this fast. By the end of the year, we thought it would. Yes, I thought it would be here, right? But thought it would be a gradual increase. This thing right now is taking off like a rocket ship to space. All right. That's how the market works, guys. So if you're not ready for that, if you don't have a risk tolerance, Please don't go and put yourself into no adjustable rate mortgage. Now, on the market, depending on your credit scores, depending on your deal, depending if it's a primary residence, it's a multifamily, it's an investment property, you might get a 1% lower interest rate, maybe a 1.5% lower interest rate, just depending on the overall deal and product. I'm not going to go into all of that today because we'll be here for hours, right? But depending on that, you might get a point to a 1.5 lower. You have to ask yourself, is that point and a 1.5 lower for your first 5 years of ownership, 7 years? Is it worth it taking that risk? Because if your rate, let's just say, is 4% on an adjustable rate mortgage for 5 years, who knows where the market is going to be in 5 years from now? So, do you want to take that risk of it adjusting on you and it keeps going up and up and up? What if the housing market does crash like a lot of you have been wishing for, and now you don't have no equity in your house and you're upside down and you can't refinance, and or it don't make sense to sell your property at this time? These are the things that you guys got to pay attention to and think about when you're looking to take out an adjustable rate mortgage. Now, for me, I am a fan of 30-year fixed mortgages. It's stable, it's fixed. I know what the rate is going to be. I know what my principal and interest payment is going to be for 30 years, right? What's going to fluctuate is going to be my taxes and insurance, but I'm okay with that because I know I don't control that. But I know my principal and interest payment, regardless of what happens in the market, whether the homes decline, appreciate, interest rates continue to rise, it doesn't matter. I never have to refinance because I have a fixed rate payment. Now, I want to flip on the flip side. Let's just say you do take out a fixed rate mortgage today, 5.5%, 6%, 6.5%. If you have the opportunity to refinance in the future, if rates go lower, that will be a home run for you. Right now, I do think at some point in the next couple years, rates might dip back down again. Okay. But who knows? I'm not going to tell you that's going to happen and telling you to, hey, you can go buy this house today with the high rate because you're going to refinance. That's not what I'm telling you. And be careful. I'm glad I'm saying this. Be careful of the people who are telling you that. If you're speaking to a lender and if they're trying to push you and say, hey, do this, you can always refinance in a year or two when the market comes back down, fire that lender. Fire them today because they're just trying to get a sale today and they're not really trying to give you the proper education. So I need you guys to understand that. All right. Don't play yourself by putting yourself in the position that you know you can afford. Never depend on the refinance because it's not guaranteed to happen. There's too many factors that go with a refinance that can put you into a bad position to fail. And this is what I've seen over the course of my year where people have been sold this dream and then they can't even make it happen because they were lied to. All right. And I don't want you guys to be lied to. All right. So that's my quick intro. Let's bring some questions. If you got questions, put them on the screen. We're going to put them on the screen real quick because I literally have, I don't even know. I literally have 7 more minutes, 8 more minutes with you guys. Let's talk about this topic. Shout out to Prudent Mom. I see you in the comments. I appreciate all y'all. Shout out to my Godfather Son team. I see you, Dan, in the comments. Stephanie Burton says 100%. Yes, I'm assuming that you agree with me. What Prudent Mom said click that after the recession, what she said, after the recession they may go down. Look, I'm gonna come on here tomorrow and I'm gonna talk about the recession in real estate tomorrow. All right, but there's no guarantee after the recession they might go down. Who knows? Never bank on that type of stuff, guys. No one knows. Hell, this government's printing so much money right now. If a recession happens, they might just let it happen and not print no more money. Don't depend on the government buying the market again. They brought it for the pandemic. They may not never do it again, or they may not do it at this level that they've done it before. So you just can't do it and depend on what the government might do or if the market might go down in the future. This is why you always just got to make decisions on based off of today. Don't buy real estate if you can't afford the payment. Period. Don't buy investment properties if you can't afford to make those investment property payments yourself, because tenants are not guaranteed to pay you anything. Um, Now, with higher interest rates, if you're buying investment properties, this will hurt your cash flow. But this is why it's even more important to know how to analyze real estate deals, and buy right to make the right decisions. All right, Julio Lopez, what he's saying? Yo, MG, I got a friend that wants to go through Quicken Loans. I told him to go through a mortgage broker. What do you think? Um, Julio, look, Quicken Loans is I'm not gonna talk bad about Quicken, all right? Or a mortgage broker. I would tell your friend to make an educated decision on who they're gonna work with, right? The person at Quicken Loans might not be the right person. The mortgage broker might not be the right person for them. It's all on how they're going to interview. What are their real estate goals? Like, what exactly are they trying to do? And for me, that would determine who I would go with. Me personally, if I had to choose between the mortgage broker and Quicken Loans, I'm probably going to go with the mortgage broker, to be honest with you guys, because I feel like the mortgage broker will probably be more knowledgeable than a loan officer that just works for Quicken Loans. And Quicken Loans is that loan officer only has access to Quicken Loans products. That mortgage broker will have access to more products and programs and probably a little bit more sophisticated. So depending on who they are and what they're trying to do, the mortgage broker might be the best option. But let me tell you who's better than all of them. The mortgage king himself, baby. Send them my way, and I'll take care of them. Let's get another question up here, Tooks. Tooks, we need the Tooks cam back. What you doing? See, we've been off for this for a while. We need the Tooks cam back. We ain't got the big computer no more, but that's another story. All right. Omar says, would it be smart to get a cosigner if my credit score is low? Yes. Next question. That's all I got for that one. A Chanel says, if you do a cash out refinance, can your interest rate go up on a fixed rate? Yes. In today's market, if you're doing a cash out refinance, expect your interest rate to be well over 6%. So yes, got to make sure it makes sense. Now, before take this question down, I want to stay with this cash out refinance thing. Be wary of the folks who are trying to hard sell you. Attention to all my homeowners. If you're talking to a lender, a loan officer, and if they're trying to continuously to hard sell you on, oh, you can take out money to pay off bills. You can do this, you can do that. Be wary of that, right? Yes, all of that is true. And you have to look at the overall benefit of that, right? If you pay off these bills, what's your mortgage payment going to go to? What's the long-term savings? But a lot of loan officers out there, a lot of shiesty ones out there will try to hard sell you on do this, do this, do this, do this. And it might not be worth it. And you might think it'd be worth it because they're not really showing you the true numbers. So if you're going to do a cash out refinance, especially a debt consolidation or anything like that right now in this market, where I know the rates are going to be well over 6%, make sure you do your due diligence and you do your numbers right before you sign the paper. If you want a second opinion on any of your deals, guys, I'm going to put the link in this description. You can always get a second opinion from me and my team, and we'll tell you the God's honest truth if it's right or if it's wrong for you to do. Next question. CJ Robertson says, yo, MG, will you sell now with a 2.875 fixed rate 15-year mortgage to profit 100K, then buy again with the rates this high? Wow, CJ, that's a good question. It really depends on what you're trying to do. Are you upgrading your house? Do you need more space, et cetera, et cetera? Me personally, I wouldn't want to lose that 2.875 because I know you're going to be over 5% right now on a 15-year fix on your next house. And then even with your next house, hell, how much more are you going to pay for that house because home prices are up and it's stuck. And then how long would it take you to find this next house, right? So there's a lot of factors. Just I can't really answer without knowing your whole situation, CJ Robinson. But just reading your question right now, I wouldn't refinance. I would probably just take that 100K and try to get a home equity line of credit and get 60 to 70K in my pocket to reinvest and buy more real estate. That's what I would personally do without selling this house, me personally. Just, what's up, Playboy? How are you? All right, what rate can you give for a cash out refinance for an investment property? Oh, you're going to be well over 6.5 to 7% right now on a cash out refinance on an investment property. Hit me up, Justin. We'll take care of you, man. You got the math. Trav, shout out to Trav. You said, what if your DTI is too high? Is it wise to get a cosigner? Absolutely. If your DTI is too high, why not get a cosigner? See if you can still get the deal done. Try to pay off some of that debt too. I would highly recommend that to get your DTI lower, because even if you do have a cosigner, you still have to, you're going to be the one who's paying the mortgage. And if you got a lot of debt, it might not be affordable. Just because a lender will approve you and you're eligible doesn't mean you can afford it, right? So you got to look at the overall picture. Crystal says, how do you feel about investing in owner-occupied multifamily with already solid tenants on board? One has a program. Go for it, Crystal. But I would say that sounds great. Make sure you do your due diligence and solid. You get proof of payments that they're paying every month. If they have the program, then you already know that's easy breezy money for you. But I would say make sure you do your due diligence, because these landlords be lying. They be lying. But I like that. Turnkey real estate is always a good investment. But again, Crystal, make sure you do your due diligence, do your numbers, make sure your cash on cash return is at a great percentage. Make sure you include in all your CapEx expenses, vacancy expenses, everything, because you just can't look at that gross. You got to look at the net after all your expenses. Jermaine Johnson said, is it a bad time to buy now with interest rates so high? No, it's not a bad time to buy. Hell, I'm about to buy another 3-4 more properties this year. It's not a bad time to buy, right? It's always a good time to buy real estate, no matter what the interest rate market is, because people are always going to need a place to live. Interest rates are going up, home prices are going up, and guess what else is going up? Rent is going up too. Rent is up 20%. Right. I was watching a report the other day here in New York. They were saying rents in some part of New York is up 3, 4, 500%. Like, it's ridiculous, right? So rent is going up. So what would you rather do? Have increasing rent or have a mortgage that you own? You got to make that choice. Make sure everybody who's watching this like, comment, share, and subscribe. How much time we have? We got 2 more minutes, so that means 1 more question, and then we got to get out of here because we have an 8 o'clock production meeting with the Rants and Gems team. And make sure while I'm talking about that, make sure y'all go listen to Rants and Gems, the #1 real estate podcast in the world. Any more questions, Tooks? All right. So P Smooth says, What's up, MG? So Mortgage News Dailies had the 30-year fixed rate at 5.5. So that's what lenders are being charged to give the buyers. No. So P Smooth, I'm glad you said that, right? So that's telling you what the average national rates are. Everybody's situation is different. So that does not mean when you go apply for a loan that you're going to get quoted 5.5%. You might get quoted 6.25% because some of your factors might determine more risk, which means a higher interest rate. So that's just giving you a baseline of where the mortgage rates are nationally, but you can expect those rates to be much higher when you go apply. You're going to be quoted over 6% in today's market. What's today? May 2nd, 2022. Ladies and gentlemen, I am here to tell you, May 2nd, 2022, you are going to get quoted over 6% on a 30-year fix, probably from a majority of the lenders out there starting tomorrow. No doubt about it. All right. Now, here's another thing I want to tell you guys. Not only can you watch this on my YouTube channel, now what we're going to start doing, because a lot of you guys love to watch it on YouTube, but I understand a lot of you guys like to listen to it on podcast networks too. So all of my videos that I start producing from this day on will be uploaded to all podcast audio outlets. So all you got to do is go to wherever you listen to your podcast and search MG the Mortgage Guy or the Home Buyers Blueprint, and you'll see the audio to my YouTube now. All right. So make sure y'all rate it 5 stars and do all that good stuff, because I'm going to have 2 #1 podcasts on real estate in the world. I'm calling it right now. Watch me do this. All right. So look, that's all I got for you guys right now. We got a meeting to go to. I'm going to tap in here tomorrow and we're going to talk a little bit more. Again, Tooks is going to upload this to all podcast audio outlets too. Again, search it. MG the Mortgage Guy, the Home Buyers Blueprint podcast. Yeah, I guess that's the name. So welcome to the first episode, y'all. I'm gonna make y'all famous too. All right. So Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. Peace.
It's Matt G, making moves, flipping real estate. We building wealth, get your minds right and elevate. It's the mortgage king, we do it truly, bro. Dropping gems like a thief up in the jury cell. Wealth building equity in real estate, the mission. Collaboration is greater than competition.